Cheers, everybody. Welcome. Good morning, good evening, wherever you are. By the power of 369, I am joined today by the most powerful people in all of the Hex community.
Bang,
Kareem
bang.
and Silver the Antidote. How you guys doing? From Singapore. Cheers.
Woo.
From Singapore. Cheers,
Cheers.
everybody. How are you doing? Glad to be here.
Same. Everybody, welcome. Thanks for being here. It is true. The bots are real, right? In the flesh, right here. Shout out to Singapore. Great place. You should come visit for sure. But yeah, we have a treat for you guys today. And thanks for being there early, because I know it's early where you guys are from, most of the people.
But going to be afternoon in Europe, yeah?
Yeah.
So there you go. Europeans get the win. Huh?
So
9
joining
p.m.
in from all over the world. Happy to be up this morning. Last night I got the call, let's rally the troops this evening. I'm just getting so confused because time is such a thing that evades me sometimes when we're all over the world like this, but it's pretty amazing. There's a lot of interesting stuff going on the chain right now. So, I titled the episode Blockchain Codes because I'm here with Kareem, who understands a lot about the mechanics of the Hex contract in particular. And then obviously you guys know Silver the Antidote. We've been working together for over 6 months in our private Discord group, and that actually closes today. But it's getting revamped and it's going to be brought back online in anticipation of PulseChain launch later this year. So look out for that. But there's a lot going on right now on the blockchain. And so I guess right now I'll yield over to you, Silver, if you want to kind of set the tone and explain to everybody what you've been seeing on the chain.
Okay, so we've had quite a lot of decent activity. I have highlighted a few accounts that I am deeming as a little bit of troublemakers at the moment, keeping us in this range that we're in. They seem to like selling at this particular point. But the ammunition that is remaining it probably sounds a lot to a lot of people, but combined power is probably about 10 million US. That is what's kind of keeping us stagnated here for the time being. And luckily, we found this new account, which we started to talk about a little bit. They've been connected to 3 Genesis wallets, and this appears to be a brand new player into the system. And when you actually think about this, it's quite a critical thing to understand. This person, new person, or maybe not, has been around since Ethereum came out. So that means they've been in the space probably for a good decade anyway. And this is the first interaction they've had. Now, I was thinking a bit more about this today. And what I find possible is that this might not be someone new. It's just a fresh account because they were very quick to buy. They knew which range they wanted to buy. They came in with power and then they staked it very quickly, meaning they know how the system already operates. So this might, highly speculative. This might actually be connected to the real Godwell himself, potentially, as a side account, right? Because we know he has one major account that he has done things through and lots of other sub accounts off of that. It would be very interesting if actually this guy is the Godwell himself. Now, obviously, there's no proof to do that because I lose it at point of exchange when it comes in and out. But just the fact alone that they were quick to stake, meaning they understand the system already. It's not just somebody buying, dabbling, very concrete moves that were played. So they actually have another wallet, and I quickly did about a 10-minute scan on this account this morning before I went out, and they do have about 9.5 ETH left over, 9.5 thousand, yeah, which is about 15 million. And then under another wallet, they have another 1,000 laying there. So they still have 10,500 ETH, 16, $17 million potentially earmarked to go into this. Yeah. So that is going to counterbalance all of the negative players that I'm seeing at the moment who are dripping out, cashing out. We still have that big player at the moment with 127 million that was pulled out of stake probably about 2 days ago. That has remained and that hasn't moved. So I was just having a little discussion with Karim a minute ago, and he's pretty sure that that one is actually going to restake it. And either way, they will be waiting for the snapshot regardless. So the likelihood of that becoming sell pressure in the short term, I think it's safe to say won't be there, at least, up until the announcements or anything like that. So now we're looking at, okay, there's only a potential of like $2 million worth of sell pressure in some of the accounts that I've highlighted during the last probably 4 to 5 days. So yeah, they're selling enough to kind of keep the pressure down on price. So we need to see what happens. Maybe there's some extra large moves and that bounces back up. I'm really anxious for the price to go to the 7 and break through that range and then wait for some of that liquidity to shift. That's going to be a big dynamic change in price that we're waiting for. But at the moment, it's just that little bull bear kind of battle going on that we're seeing. Yeah. So
yeah, I mean, there's a lot to
a brief
speak.
update.
There's a lot to speak to that, Silver. Like, this is usually how these markets play out when, as this stuff becomes more rare, big whales have to come in and create new ranges. And the funny thing about this particular range that we're in right now is that it is like a low liquidity zone. And so typically what you'll see on the price chart is lots of volatility and price action where it goes more sideways but slightly down. And that's just giving new guys a chance to come in, step in, accumulate bags. But the problem that they're having is that they can't accumulate without incurring as much slippage. And if this one guy is able to accumulate the $10 million on his own, it's unlikely that they'll be able to do so, because for me, in my own personal example, I know of 3 individuals that want exposure to Hex. They have $30 million sitting on the sidelines that don't know how to get in, right? Because they're going to incur slippage. That's 3 people that I know of, friend of a friend type stuff. And then you have this large ETH Genesis whale that's also competing for the same stuff inside of this highly volatile range. And so what it does ends up happening is it looks shaky, but that couldn't be further from the truth. This is a function of the low liquidity, and this is what really ends up driving price higher into a much needed new range. And I think I've speculated between 12 and 20 cents would be the next possible range.
And I think that's one of the interesting things, because there's a lot of psychology that goes into it, and the people who are clearly very patient, decade-year accounts who have millions of dollars, they're not new to the game of how to acquire, how to buy. So what they might be actually doing is waiting for frustration of some. People generally buy, they want price to go up. A lot of the traders will buy, make little 5-10% profits, sell. Maybe they're waiting as well for some little rollover potentially inside of ETH, Bitcoin. That always ricochets into the traders who are getting out Hex as well, because they think they're front running it. And that can create a bit of a domino price down. And then that's when that particular player did the buy at about, 5.6 cents, something like that. It was right
here. It was this buy came in at 5.3 cents, and it was 1,000 ETH, and wicked the price right back up to 5.9. Yeah. So he moved basically a penny himself.
He probably already had a limit order ready, and then he just, when you get to that event, just pulled it out and then grabbed it. So yeah. And speaking of which, some of the stuff you guys were talking about earlier, I got pretty cool theory, which I think, again, quick math backed by some common sense that I see. You know what I mean? So number one is that, especially talking about that ETH well, the Genesis, the theory that Silver talks about is actually, very, very valid to some extent. But then I look at it also by what Godwell has done for the past, many years. He has no business hiding. He would like to say that, hey, it's me, so people will know he has always had that behavior doing the right thing. I'm actually more on the idea of this being a new player, and we do a pretty good job as a community to inform people how great Hex is, how does it work, the education and everything that goes and so on and so forth. And just like AXiS, I know many people, money side online, that are just having a hard time getting in, but they're watching. So the person is trained, could have just been watching for many, many, many years, or many, many months, been waiting for an opportunity to come in. And then when the opportunity came, was able to buy and do all the staking, because good investors should do all the investing strategy of learning the assets. By the time they pull the trigger, it's just to do the application part, just doing the 1, 2, 3. So in other words, he could have been a new player, heard about it at some point, wasn't early enough or whatever it might be, but was ready to pull the trigger. Because fair enough, that reminded myself when I finally did my research, did all thing, and then I was like, yo, let's just get the money, and now we just apply. And then now he's waiting for every big opportunity, every dips to really move fast and trigger and grab that. Because in his mind, he's like anything below, I'm just giving an example, below 6 is a go. And he wants to do, 1,000 ETH at a time to grab as much liquidity as possible. So not only he waited for the price to dip to a certain point, but also there was a lot of liquidity available. Because the average trader, what he was doing, he was charting the chart, looking at the rising wedge, looking at maybe the RSI, breaking down.
Let's look at that. Let's look at the technicals.
Everybody and their mom on the 4 hour looked at it like, oh, this thing is about to correct down. So he waited for all of that, wait for the sales to come in, all the liquidity, thinking we're going to sell now and then buy back at, 4 cents.
We'll look at that here in a second, Karim.
Thank you very much. And then he grabbed all that liquidity. And
let's paint this picture. Let's paint this picture here for a second.
Big whales like to wait, but at the end of the day, we've been in the bear market for a long time. Yeah. And there's only so much you can do to wait, because there's another pressure that comes in, which is liquidity is being removed. Billions of hex were removed when when the OA removed that big liquidity wall with Hedron. People forget that. There was a lot of hex that was just there.
52
and that got
million.
removed. It's hex that can no longer be bought, because as a big well, when you have multiple pool that you can play with, Uniswap will help you by creating liquidity by just jumping all those different pools. So when the OA remove all those millions of hex, that created a major shortage. You got that going on. You got massive share rate increase. And then now you're getting good news that PulseChain is back on track into getting ready to launch. So all that FOMO is basically telling you the train is about to leave the station. So now you have really an important decision to make, which is, do I wait to expect a dip that might not come? Or do I go in now because all the roadblocks are being removed, the training wheels are about to get removed, and we're about to go showtime. So as well, you really got to ask yourself, AXiS used to joke about it all the time. What's 3, 4, 5, 6, 7 cents on your way to dollars? You know what I mean? So you got to look at it like when you're at 50 cents again or up, nobody's going to worry about who bought at 5 cents, who bought at 6 cents. At the end of the day, they're going to be like, you still basically 8 to 10x your money.
Yes.
Plus a doubling that you're going to get. So as everything goes according to plan, as liquidity getting sucked in, that reminds the whales, especially those who haven't got in, that time is ticking. You better get it now or not. And the shorter the liquidity get, Godwell could play the same game he played last time when PulseChain sacrificed, because low liquidity. Some whales want to close the door for other whales so they don't come in and take too big of the pie. So they can just say, liquidity is being removed. I know you want to get in, but I don't want you to be as big as
I always
me.
like to remind people by showing them what happened to hex in the beginning.
What do I lose? I just get more of the stuff that I like, and I make my stack look bigger. And I push the price up. Does that make sense? So there's a lot of those math that goes into, and also psychology, because also people like to buy stuff that are expensive, and by pushing the price up rapidly like that, all the little fish comes in too. Yeah. And then they take the rest, and then they push the price even further. So you as well, you really got to ask yourself, how long do I wait before I get in? Because if I wait too long, the opportunity cost gets greater and greater, if that makes sense.
Yes.
All right. So let's look at this begin.
I quickly went through Godwell's 66D account and just checked out some of the pattern history, 1,000 days ago, 800, 900 days ago. And the profiles are actually different between who this new Genesis account is compared to that one. So what we're talking about is there was a lot of yield finance related transactions with this new one, which isn't the similar activity on the Godwell account. So it's unlikely, just from profiling, that it's the same person, because normally people would trade the same type of game plans that they're doing on multiple accounts. So because the industries that they were in are completely different, I am more towards that this is not Godwell. And this is actually more beneficial, because I would like to think that this is not them, because this means, okay, a new player has come, new big player, a lot of experience, and that is actually very powerful, because that gives further proof to other people when this person or when this account becomes public, which is why I posted it, because it reconfirms that big money decade-old accounts are taking this thing seriously. And that's why we say, okay, whale. And then that's why we put out the word pods, because whales like to move with other whales. It gives reassurance to the others as well. So I think it's just a case of this one is taking that move quickly now. And I think it's safe to say with what everybody's saying, there's a lot of other big money that's waiting to come. This guy just said, you know what, I'm going to take it now. And I'm going to take it first before anyone else come in. And that is real smart money play while you can at this range.
Hey, can you guys hear me right now?
AXiS, you muted. Can't hear you.
I think it's on your end.
Uh-oh.
I think it's on
Can
your
you
end.
hear us at least?
Because you guys in the chat, you can hear me, right?
It's like it's muted.
Yeah.
Yeah, they can hear. You guys can't hear me.
I didn't do that one.
Yeah.
I don't normally follow the comments.
Yeah.
All right. Maybe you want to add something?
Yeah, but I want to make sure he can because he's muted. He can't hear. Hold on. Let's see.
No.
Yeah. No, we can't hear you. Oh.
Maybe it's us.
Wait, but can you hear us then?
Yeah.
Yeah. Should we just jump out and jump in? Yeah.
Yep. Can you hear me now?
No. All right. Let me leave. I'll come back.
All right, guys. So let's get some context here. Check this shit out. So on the 4-hour chart on Hex has protected the 45 level in the beginning as it was recovering out of the bear market. Before that, the RSI on the 4-hour was like trading below this bottom band. And the issue that we had was that we couldn't quite get above it and stay above it for any kind of significant amount of time. But what ended up happening was, as we started to build structure coming off that bottom, we started to protect the 45 level. And then eventually what you want to see to flip into a bull market is when you protect the 50 level on the RSI. And this is in particular is the 4-hour chart. So can you hear me now?
How about now? Can you hear us?
Yep. Can you hear me?
Wow, you can hear us, but we can't hear you.
That's weird.
We were hearing you just fine, and all of a sudden now we can't hear you.
I hear you. Got it.
Yeah.
Oh, now it works.
Okay. So check this shit out. There's a couple things you guys mentioned in there that I thought was really good, and I kind of wanted to bring in the technical level of that. And so what I was trying to explain to everybody was how as we came out of that bear market, we started to flip the 45 level on the RSI on the 4-hour as support, and then typically what you want to see signs in the relative strength is when the price starts to hold and bounce off the 50. And if you notice, we had that huge run up to the 76 level, came back down to test the 55. So your bands are from a 45 to a 55, but if you hold the 50 level, it usually remains bullish. Well, look what we just recently got. When that ETH whale came in and did that second buy, you actually had a double bottom on the 50 level on the RSI, which means continuation. So now traders are going to step in, and you can see that price came back down to test the top of the bull flag, and that now is bouncing. And this is just clean skies now. Like, I would not be surprised to see us go test 7 cents in the next few hours. You know, by the end of the day today, you'll at least try to see a test of the high. And that's just a function of traders seeing a confirmed breakout pattern. So if you go to my website, I have this section in here called the resources page, axisALiVE.com. And inside of here, I'll show you the actual technical pattern, how that typically plays out. We did this live the other day. I know Silver was in the chat kind of feeding us the updates on who was buying and how much they were buying. If you click on resources, go to technical analysis, and then it'll be a flag. So you click on flags and pennants, and I'm going to pull up the bull flag chart here. This is typically what you see is you see a large pull, and then a new consolidation range. In this case, it's that high slippage zone where price is trading between 5 and 6 cents, where there's no liquidity. And then so the whale was sitting here waiting to absorb at these lower ends of the flag. And then as soon as it got down here, he dumps the 1,000 ETH and it pumps the price up halfway through the flag. And then the rest of the people take it up through to test. And then you get that PulseChain announcement from Richard, which really just shoots the price vertically out of here. And then it came back down to test the flag. And so your measured move here is basically a doubling of the flagpole. You can see here how this measured move here goes from the base of the pole to the top of the pole. We'll go take that from the breakout point. We'll kind of see what we can get on the chart now. So if I take this particular pattern we got and get rid of the RSI so you see more, and I measure a move from the previous breakout level to the as a pole here, that's your pole, and then project it out from the breakout point here, you're looking at roughly the 1618 target. This is math, guys. The 618 is a golden ratio. This is sitting at 14 cents. This is where we're targeting, you know, the old saying of you could have sold it on a double. You could have sold it on a double. I could have sold it on a double. I could have sold it on a double. Well, we're starting to get those doublings. I think this will be the 4th doubling off the bottom, right? So it's all math. It's all built on the chain. Yep.
Once there too, that was a support zone.
It's a key level. And like when we zoom out, I did want to say this too, to the point you made, Karim, about people forget because they're of recency bias. They forget what the chart can do. So if you saw this huge 10x move up on hex price, you might have thought, well, that's got to be it, right? Well, no, because look what happened. Godwell comes in, starts pumping. Like, look at this, just totally shrinks down the price. This is the beginning of hex, you know. And then you see these kind of candles start to print. You're like, oh, it's got to be over, right? Nope, it ain't over. It ain't over. It ain't over. You know, it's just like it. And so like, and then you fast forward to big payday. And like, you know, you have this kind of structure. This is where Karim was really loading up. I remember he was very public about that at that time with the Dream account, you know, because he's anticipating a big run up into big payday. Well, then you get this consolidation sideways, right? We're kind of in that coming out of that curving period where price exploded off a low and it's curving out and creating a new range. And this is the range that's being accumulated now for the big explosion higher that goes up, you know, 200 to 300% higher, right? Yep. So this is just par for the course for hex. You know,
exactly.
And so looking at this pattern, looking at the technicals, looking at, you know, the liquidity again, we touched on the liquidity a little bit. There's just nothing out here, man. We've been saying it all week. We've been saying it for months, really, but there's nothing to buy. Like your best chance of buying is on the ETH versus hex pair on the 1% pair. And that means there's about
what Well did. He went and he swapped ETH, not USDC, because he knew you had more liquidity there. But he also knew it's 1% slippage. So that's why he had to wait for that dip and then get in, because, you know, 1% and 0.3 is a big difference when you have, you know, millions of dollars.
Yeah, this guy knows a lot about liquidity. You know, he's done it, right? There's a lot of history in this account of providing and of yield farming and doing these different aspects as well. So they know exactly what they're doing inside of here, whereas a lot of people don't.
And what's even more smart is the person setting the liquidity, basically saying, we know there's the major ETH updates coming up next month. We know ETH is valuable. You want some hex, this is what we're willing to trade for. It is genius. We like USDC, but we want ETH more because we feel like this might be more valuable. And then when ETH runs, again, we move as a function of a square. This is how we can easily, people sit here and think, oh yeah, actually it's 14 cents. That sounds like far-fetched. But next thing you know, the upgrade comes in, ETH goes back to 2,500, maybe 3K. Next thing you know, you can get 14 cents in a matter of just like staying in the ratio. It can happen very, very fast.
Yeah, it's going to be interesting on that Ether pair how long people leave it in that range, because for people buying large amounts, yeah, they're going to be able to do sort of what 200K type
this
buys.
This is a $500,000 wall. That's it.
Yeah,
exactly.
So
it's not much.
That's the last stop. That's what I was talking about earlier about stops. This is the last stop. First warning was the OA removed the hex on the hedron pair, so you can't touch that anymore. Second warning was people themselves start to remove because they keep hearing the news. Hey, we're about to launch soon. And then now this is the third warning where now the ETH pair is being eaten now with this new player coming in, which basically is telling you tick tock, because I'm telling you, the moment you hear about Snapshot after V3 the testnet launch, everybody and their mom, besides, you know, the origin address, I expect them to remove their liquidity, because I mean, why would you leave it there? Just go get your double. You know what I mean?
Yeah.
This is where the end of the liquidity band is this blue line. So basically, once you get above that blue line, it's literally price can go vertical until the liquidity is then reset in a higher range. And I just wanted to make you guys aware that this yellow line is basically what Ethereum did to Bitcoin last cycle. And so, like, look at how Hex is completely demolishing ETH.
Yeah.
Whereas, like, ETH struggled to kind of make gains against Bitcoin. And a part of that is because how cheap Hex is relative to ETH and how cheap Hex is relative to Bitcoin. But that shows you how early we are in the cycle. And if you zoom out the chart now and you look at the whole thing, like look at what's possible when this thing starts to go. Last time we broke off that bull flag, we ran 3,000% against Ethereum. And the first time off the lows, you ran 6,700% off that low. And so just even to get another 3,000 move off here, I mean, wow, you're going up into this territory, That's 61.10. Damn, that's okay. Let me do some math while you guys talk and I'll figure out what the dollar price would be.
Let me go with this for the moment. So everybody knows who is actively buying at the moment. We've made that public. We have a few people that are still exiting. We've now spoke about what's coming right around the corner, which is going to be the announcement. Karim and everybody knows the liquidity will pull. Nobody is going to leave anything on any form of exchange. So that's going to make a narrow band of available supply. So at that particular crunch point, it is now effectively impossible for any large player to get in. So this is probably more of like a public service announcement to the big money out there that if you're wanting to actually get a piece of this, time really is running out. And that's why price really doesn't matter, because price is going to run, it's going to go, because when the real FOMO comes, announcement say what 5 days 7 days before it comes out, we're going to be live for the PulseChain. There's going to be a herd of small money eating that range all the way up. Sellers are going to sell into it and it's going to keep on moving. And even if there's some large player that wants to buy, they're left with two choices. You either have your limit orders set to take any of that knockback down sale price, or you buy up on top of all the small people buying as well. And because the liquidity is going to be real tight, 20,000 probably dollar per band all the way up, that is why the price is going to hit. And I think probably when we get over 10, 15, people might start to add some liquidity if they're not interested in the actual snapshot and duplication of coin, because sometimes people will anticipate what is going to be the value of both these coins combined. And this is where there's a lot of probably experience as well as a bit of calculated risk to determine how much is the actual market value going to be for two coins after PulseChain is out and after there's been sell pressure into it. Because it's probably fair to say there will be sell pressure after snapshot. So the question is, what does it come down to? And the other question is, what does it stop at before that snapshot point? So this is like, nobody's going to know this, but there's going to be a feed-in frenzy that is definitely going to happen. We don't know which range it's going to top out at.
But this is why the asymmetrical risk reward tactics best done, like that Newell actually did, is yes, he staked right away, but he did what I call typically a rotation stake. He didn't go further out. He did less than 30 days.
Yeah.
So you're going to see a lot of big players, if they're smart and decisive of what's the value of this, that, is it going to be one-to-one parity or not, they do rotation stake, because you technically barely lose anything, because you still got the hex copied.
Yep.
The t-shirt's still going to copy to that point. And then when that stake ends, you get to analyze, okay, is the price still trending up? Because that could still happen.
Yep.
I remember when we were running towards 1 cent, people thought, oh my God, it will never happen. And they did the 1 cent, oh, it's going to go back down. But then we ran all the way to 50 cents.
Yeah.
So this is where it gets very dangerous. That's what we say. It's time in the market, not timing the market, because it doesn't matter how smart you think you are or how great your analysis think you are, because you don't know exactly how much money is on the side.
Nobody can. You're right, Karim. Nobody can know what's going to happen to the price because of the snapshot, and you don't know who's going to market make.
Yeah,
I'm
exactly.
willing to bet that the only person that's going to market make is somebody that's got such big bags that any permanent loss that they face during that readjustment and revaluation period can be satisfied by some staking. So it'd be like super big whales that would be willing to market make during this time frame. And if you did get a similar run up against ETH in the same way back here as you do now, as you did back here, it's looking to be like a 24% 2400% move, that would be 78% hex. And you know, who knows like what that all equates to, you know, long term. If you look at the long term price chart here, let's pull up the Coin Paprika. Basically, what I see happening is that we're in the fair valuation channel right now, which is basically from, it was set by Big Payday. So if you take like a parallel channel, you catch the lows and you connect out to the bottom, and then you make it basically the Big Payday. You can see the connecting points here. It's very, very clear. You get this level here, 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 here. So this is our fair value channel. And this might be where you look for price to come back down to after this explosive move off these levels. 78 cents is clear up here.
Yes. And friendly reminder, I say this all the time, people think it's a joke, but people forget, again, what Hex was designed to do. It's designed to pump. That's literally the point. This is the reason why they can play this game of cutting our market cap, cutting our circuit. It doesn't matter. If anything, it's more bullish. You're going to lower our market cap. We're still going to pump and pass you up. So another cool thing to reminder that what the big whale likes to do is that they love to suck that liquidity too, because they also don't like, because I know a few of them, they don't like cheap Hex anyway. So everybody heard Godwell said it many times himself, like, you know, hundreds of dollars. So it's like, yes, they're going to potentially market at a certain point, but that doesn't mean they're going to give it to you for cheap. Like Axis has been saying with those measure moves, they might say, all right, cool, we're sucking everything up, and then we're putting the liquidity over there. So if you want it, you go buy it over there at that price. It's like the elevator going to the next level, the train going to the next station, meaning we gave you a chance, we gave you time, but now we're moving up. So you either get with the program or you get left behind.
Now, notice how we did a clean bounce off that midline here too, as you're speaking.
Yes, sir.
Even when you like analyze some of the things that Godwell does, there's a lot of uncertainty in the community when that large 2 billion stake came out. People were waiting. Oh, what's he going to do? Is he going to sell? It's like, guys, don't you even understand what this guy represents? Have you not even like looked at his tweets, what he values at himself? And then during that window, there was a lot of liquidity on the table there as well that people could have took advantage of. But again, they were scared. They wanted to wait and see. And that's one of the biggest risks you can actually ever have, is waiting for something to happen instead of taking action and making it happen and securing your investment, because you know the window of time changes, you know, in a blink of an eye.
Yeah, the window of time last time when it took us to flip 5 cents of support was about 30 days.
Yeah,
right. And we've already done that now in basically in 2 3-day candles. So less than a week it took us to flip that as support.
Yeah, and I think something we need to take into account now is there's actions that have been put into place with big, large, short stakes. I think that's going to be a trend that probably continues, especially for people that are coming from, you know, yield backgrounds. You got all these exchanges that have gone down. You know, you've got all this risk in different areas. Now people are looking for something that is truly DeFi, and that is why more people are probably being attracted towards Hex. It's got the time served. There's been, you know, no downtime. It's got a, you know, huge community that's pushing it. We've got this massive PulseChain that's going to be coming out. So there's going to be a lot of eyeballs, a lot of attraction coming into this sector now. So I do think it's going to be very common going into the future. People will do monthlies, will do 6-month stakes instead of pushing them out too far, because it's also, for people on a learning curve who might be coming into Hex, it's nice to have, you know, you can access the funds, the value after 30 days or whatever, and you can sell the yield. And actually selling the yield is beneficial, especially when we have like tight liquidity. You still want to have rotation of people going out and people coming in, and for people to be rewarded along the journey as well. Yeah, we fulfills what the whole objective of Hex is. We do need supply in there, otherwise people can't buy, right? You have to have turnover.
No, of course. But I think what it comes down to is that, again, as long as you have done your time, as long as you have delayed gratification. In other words, when you start with a little bit, staking long is actually your best strategy, because you got to grow the stack. And the real secret is, like I told my brother, is that when you get to that point when you're lucky enough to become, let's say, a millionaire or a decamillionaire, whatever it might be, this is actually when the real test comes in. Because instead of saying, hey, let me cash out and do X, Y, and Z, you don't realize that the valuation upgrade that you got is actually the secret that's gonna allow you to be able to do that rotation stake. Because if you do a rotation stake for 30 days, 45 days, and you're getting 1% or 1.8% yield, when you had that small stash, it's basically insignificant. I mean, in some cases, it doesn't even pay the trading fee. You know what I mean? If you do
if it's small, yeah.
But if you were wise enough, because it's not about being smart, it's about being wise. Because, oh my God, millions of dollars. If you're wise enough, after your 100x, after you have delayed gratification, you have built that stack, the system naturally allows you to do rotation stakes, because now your wealth is 100 times more. Now, all of a sudden, like a few of my friends, you got $1 million, $1.5 million on rotation. You can easily clear $10,000, $15,000 a month. That pays all your bill. So the system actually is designed to allow you to say, hey, you have delayed gratification. You've been here long enough. You've been to enough cycle. You now have the ability to earn a little extra. The bigger pays better now actually helps you. And he also reminds you that you made all this money, but if you cash everything out, that dream of rotation stake 10K a month is also going to go away. Because the T-share preservation that you did not do is going to ensure that you get left behind. So literally everything is designed to remind you that there is the risk, there is the reward. There is the carrot, there is the stick. So when people look at it, like, oh my God, you get this many money. Me, I look at it like daily payout. Like when my friend looks at it like, oh, when you're going to be a billionaire, I'm looking at it like when I'm going to get $100,000 a day. Like it's a different mindset, because it's about, again, you stake, you date.
Yeah, there needs to be a whole effort to re-educate people on staking strategies and like weighing the risk of your portfolio, how much should be liquid, how much should be staked, how far out should it be staked. And that's all really important knowledge to have. And if like you're just coming into this, and like if you're somebody that learned about hex at 20 cents, you were coming in at the end of a massive wave up, like almost at the 10,000x level off the bottom. And so like if you were one of those people, you came in and you're just listening to people on the internet and without critically thinking yourself or like understanding the system before aping in, you need to like take a step back. And hopefully you've been earning cash and working a job the whole time since, because you've had 600 days to accumulate on every new dip. And if you were able to even put in a small fraction of what you put in up there at the bottom, like you would have been able to bring your dollar cost average down under 10 cents. And that's really where the money's made in crypto, is on the retracements. Smart money buys blood. And so if you don't know how to like strategize around a portfolio and like get the right ratio of liquid hex to Ethereum for gas to staked hex for 5 years or staked hex for longer, you need to consult somebody who knows what they're talking about, is what you need to do. So if that's something you're interested in, go check out my website. Like that's a great place to go for one-on-one information.
You're going to have a lot of people that are definitely in different walks of life. There's going to be people who are, up in their 70s, 60s. They are going to have completely different time horizons to other people, but they may have, significant assets that they can deploy into this, which is why for people like that, it may be beneficial for them to be rolling shorter term, unless it's going to be more of like an inheritance vehicle that they pass down generation to generation. Then they can do T-share preservation on that account. Again, it's really down to what type of actors it is that are investing. But at the end of the day, anyone that comes in acquires and gets familiar with how the system works, takes part in it, and can then share that onto other people, around their social networks. That's the social network effect, isn't it? Like each one person can share it to 20 others, and then those 20 can share it to another, 200 people, for example. Yeah,
so absolutely. I mean, this is where, again, that education comes back in, and the notion of be able to have a staking ladder. It's funny because this is literally why, when I first started until to this day, what I preach and what I teach and educate about. This is actually the idea why the Dream account actually was created and exists. So you cannot be confused and separate the two. Dream account is that T-share preservation.
Yes.
Dream account is the thing that's going to not take care of you, your retirement, your kids, your grandkids, and who knows whatever happens after that. And you can see even Godwell doing that. When he got his first big stake that came out after big payday, what did he do? New account, billion hex, put it over there. T-share preservation, he got everything back, and then all just by using his big payday bonus. So he got all of his T-share back, put it in a separate account for security, Cuatro Cinco that thing, put it way over there, and then the other stuff, he segmented it into, 300 million, 450 million X, like, 5 years, 7 years, and then one is doing the rotation with that has been holding for a while. So it's like, it's literally when you practice what we preach and you apply all those teachings, everything is set for you to succeed. Because the harsh reality is when you start, you must do your time.
Right.
If not, you're literally exponentially getting left behind because you don't have any enough economic mass that your bigger pace better is going to be significant. So the best
So
thing
I got a
you're going to do.
question. I got a question here from Brennan. He says, how long do we have at 6 cents hex? Any chance after B3 launches?
I think we saw 7 cents this week. Like, this is
So the problem that you have is that this is exactly what we've been talking about for like 2 weeks, which is that you don't have long at 6 cents. Like, that's what we're trying to make people realize. And I've been saying, do not get left behind since back here before we made our price bottom. Like, I'm being like, I'm starting to get scared of the risk to the upside, meaning like when this thing rubber bands back up, it's like a beach ball being held underwater, but the beach ball is growing in size and getting lighter and lighter and lighter, so that when it does finally pop up above water, it's going to launch out like a freaking sperm whale jumping 100 feet out of the air. And that's the problem, is because like back here in the beginning of the when we first made our breakout in price, we went from the 2.5 cent level all the way to the 6.6 cent level in like 9 days. But then you spent, many weeks. Let's see here. We spent 30 days going sideways at basically from 3 to 6 cents. So a super volatile sideways range. Well, this time people have accumulated all the way up to 50 cents, all the way back down. Weak hands are out. Smart money's bought. And so this move back up is a lot faster and a lot more violent, and that's a function of the low liquidity that we've been sharing with you guys now for some time. There's not many dollars out here in terms of liquidity to buy. Like, each one of these bars here represents 349,000 hex. Well, how much is 349,000 hex at 7 cents? Not much. It's 24 grand. Well, how many people do you know? Like, I just told you that I know 3 people that combined can bring in $30 million. So by themselves, not including this new Genesis ETH whale, they can push the price to all-time highs. Like, and that's just 3 or 4 guys that I know about, right? Well, how many thousands of eyes are on this chart right now? Probably a lot. Hex is the best performing thing right now. Like, let's look at it on Nomics. Let's just see, what it's done relative to the rest of the market now over the last 30 days.
Volume too. And again, this is a testament to remind people that, again, a lot of that liquidity has been drawn out. That's the beauty about the bear market.
I'll show that in a second. Great idea. Great idea, Karim. Let me show that in a second. So this is 190%. It's up. It's the third most successful coin right now over the last 30 days. Okay. So it's the chart to watch right now. And it's all traded on chain, so there's no spoofing orders, no manipulation or anything.
Look at that transparent percentage, 95%. It's hot. Love it. That's what you were talking about.
So let's look at that liquidity, because maybe this will help people realize like what I mean when I say that hex is getting rare. And I do want to talk about supply for a second. So last night, we do on Monday nights for axisALiVE.com members, we do private video sessions, and I had Crispy Man on and Crypto Sloth, and Crispy Man went through a deep dive into the circulating supply of hex. And that's important because if you know how many coins are out there liquid for sale, you'll be able to more easily project out into the future what you think price is going to do based on certain wallet behaviors. So we actually narrowed it down, and I'll bring that data up in a second. But first, I want to show you guys what's happened since June of last year. So I'm going to pull this up on a chart here. This is the liquidity. Okay, so the top bar is Ethereum, the middle bar is Hex, and the bottom bar is USDC. So you can see here, since December of last year, the amount of Ethereum that's come into the pools has gone parabolic, meaning people are putting their Ethereum in the pools and they're taking Hex out. Same for USD coin. Since October of last year, you have this long rounded base of people putting a USDC back in the pools. Well, meanwhile, all the Hex has been getting taken out of the pools, which is good for price because it means that there's less available supply for sale on market. Back here in January, there was 300 million Hex in the pools. Guess how many's in there today? Like 60 million. 60 million. The share amongst the whole entire world for market supply. Of all the pools, yeah. So against USDC and ETH, and I did a breakdown. This data is getting a little older now, but I want to show you guys kind of that there's 193% ETH plus USDC versus Hex. So there's 2-to-1 ETH and USDC to Hex. That means there's 50% more ETH and USDC in the pools than Hex, which means the balance of the ratios of Hex to USDC and ETH is imbalanced in favor of Hex price up and out of favor of ETH and USDC price up, so to speak. Because the ratios are like you have one of these to every two of these. So it's like, you know, it's easier for this to be lofted up, the Hex, right? Because there's
I'd probably say it's more like a 4-to-1 if you include obviously limit orders, which, you know, a lot harder to see. But there's going to be a lot of anticipation and price down low should it get there. So yeah, I'd say 4-to-1 realistically.
Mm-hmm. And so to take this a step further, you know, you think about, okay, there's maybe 60 million Hex on market. At the time of this, when I created this 2 days ago, or on the 24th, there was 66 million in the pools, and that was only $4 million bucks. And that was at that price. So when somebody comes in to make an order, let's say somebody wants to make $1 million order, what does that do to price? Let's check. Somebody comes in, they put in $1 million bucks. They're going to slip price up 3.3%. Well, I just told you that I know of guys that have 30 million bucks. You know, and that's not including the guy that's got 15 million in ETH and all these other guys I don't know about. You start going at $2 million a clip. Now you're moving price like 10%. Sorry, 6%. 6%. You know, but it's not just one guy buying the market. As you can see by the buy and demand function of buyers to sellers, there's 318 buys to 200 sells. And if you look at the ETH pair, it's even worse. 523 buys to 300 sells.
And the cool thing is, as the liquidity move to the upside, it actually becomes exponentially easier to push the price up with less amount of money because, again, the liquidity gets thinner and thinner. I bet if you were to put 5 million, the slippage is way worse. It's not just a function of 3% for every mil because it just, again, it gets worse and worse because it has to look what's.
So this is the problem: is people are constantly piling in because they've been left behind, and maximum pain is to the upside. If you put a $5 million order in right now, the price is going to move up 30%.
See, that's insane. That's almost 10 times. See, at 2 million, you only had 6% slippage. Now you just add 3 more million, now it's 30. Instead of being like around, you know, the 15% range, it literally more than doubled because again,
where's 30% on here? That puts you at 8 cents. Right. So how long can we be at 6 cents? Maybe a week, maybe not. Maybe today we're done. That's the problem.
Yeah. Quick message to anyone that actually does want to buy those sort of levels. It won't actually be quite that bad because you will trigger some of the limit orders on the way. That is just what's available in the market, which doesn't include limits. So it will be, you know, a couple of percent down. Yeah.
But I mean, again, shout out to Hex. People don't understand. $1 million buy order with like 3% slippage or less. That's amazing. There's shit coins out there, no offense. That's just like you put 50K, you're already over 3%. Like it's just like the simple fact that that's available and knowing all the structures and knowing how long and what's about to happen. If you've done your research and you realize this is a safely entry at this point, then that's why it's like, whoa, it's awesome. And then one more friendly reminder, which corroborate everything AXiS has been saying with this other chart that was showing all the liquidity. This is exactly the reason why I love the DMI indicator so well, because it literally pictures all of that in one, especially on the weekly chart, because it basically tells you this is the plan, this is the market makers telling you, and the liquid provider, this is what we're here to do. This is where the train is going. So when you buy your ticket, just know you're going the right way. You know what I mean? If you're going the wrong way, you're going to be left behind because they're taking this and they're basically saying, we're making Hex more expensive. This is why all the stable coins are like exponentially needs to be more used for less Hex. And even ETH gets affected by that because Hex pumps even faster than ETH can pump.
Let me add some more info. Yeah. If you want to bring up that liquidity again, if you can show me two pools, do a 0.3% and do a 1%, probably on ETH.
Okay, here's ETH 1%. Let me redo a
1%.
refresh.
And this one has obviously more of the supply there as opposed to the 0.3, and the same inside of the USDC pair as well. So the reason that the LP providers have now switched from what used to be the 0.3 over to the 1 is because now they're probably a bit more scared of having the impermanent loss of losing the coin. So by switching over to the 1%, you're actually creating more yield.
Mhm.
You're taking more risk, but you're making more reward. You're making 1% on every single trade. So that is a better player for the
Mhm.
LPs and actually worse for the buyer. So again, this is the LPs penalizing the buyers for being late and them trying not to take too much risk because they think if there's more volatility in a higher price band, but they're more spread over on a 1% range, they're going to make a lot of fees. So
Yeah.
there's a lot of
That's why
opportunity
you have
out
this
there
big block
now.
here.
Yeah,
Yes.
there's a lot of opportunity right now for people providing the 1% fees.
Yes. And to double down what he just said, again, if I'm thinking just again, quick math and playing how to have offense with defense, again, asymmetrical risk reward, it's better for me if I'm going to take a permanent loss to take the coin called ETH than USDC, because in the balance of probability in the next few months, again, with that upgrade that's coming up, there's a balance probability saying that Ethereum price might be higher than what it is today. So to minimize the level of my permanent loss, I'll rather take ETH as my counterparty, aka the other coin that I'm swapping for, instead of USDC. So in other words, I'm going to let you, quote unquote, get some hex, but as a counterparty, I'll rather have ETH than rather have USDC. Right. This is the reason why this pool is bigger than the other pool. So he's saying he attract the ETH buyer to come in, and also all those ETH wells that's been here for a while say, hey, none of your other DeFi product is working. A lot of them went kaboof, you know. The Lido is cute, but you're getting like what, 2-3%, nothing. Like when Hex is
five on a year.
Exactly. And then by the way, people can say, oh yeah, but the monthly or the rotation stake, right? 30 days, 45 days, it's only, you know, less than 2%. But what if Hex do a 5x in price? Right. Now all of a sudden 2% is 10%. Now all of a sudden, if you play the long-term game, because those other products that do 3%, that's annualized yield. Yeah. So in other words, Hex becomes a better competitor compared to those. Much better. And you're about to get a copy, and it's true DeFi because you're not taking any counterparty risk at the end of the day, because you literally do single staking in your own wallet while holding your funds. Like all those things matters. The big players at the end of the day, they're just here to make money. You know what I mean? They may not be like big fan like us, like we die hard because, you know, this thing changed our life and it's different. We're emotionally attached. But if they just strictly play the money game, this is the best bet. You're getting the maximum security because you own your coin, you do everything yourself. You're getting the best yield because, again, everything is going according to plan right now. We're about to get a copy, so you're going to be able to yield on 2-chain. What? It's game over. So this is why this is important. And again, shout out to the OA to do what it did, removing the hex that didn't really matter by shrinking the liquidity, removing it on the Hedron. Making the one on USDC very small, and then the leftover taking the ETH. Because guess what? This, as you're getting a permanent loss, if Ethereum goes to 5K, at least it minimizes some of that impermanent loss.
Yeah, I mean that was a really interesting time when that was pulled out. There was a lot of questions raised. You know, why have they done this? You know, but we broke it down, I think, quite accurately, didn't we, AXiS? Where it is just taking. What was it, 52 million hex out of supply. We're moving it from the game. And that should have actually been a very good signal for a lot of people. Something big is happening. They're just getting set up. So that, again, you know, there used to be, Richard used to do cryptic tweets. You know, he gave up on doing that stuff now. Now it's just actions. There's actions that happen. His public tweets dropped right off. So all this is signals, big signals. So those that were actually around and caught that are doing very well at the moment. And now this is the trail on part of everyone is now telling you time really is limited. This is gonna pop hard. There's just no two ways about it. The way things are lined up, you've got ETH whales that have been in for over 2,700 days, holding their stack, holding their coins from Genesis times. Now they're like, you know what?
They're getting some FOMO.
It's time to move it into something else.
Because again, the timing is perfect, and then they're realizing that again because the automatic harvesting bot is gonna basically eat those, so it's in everybody's best interest to remove their liquidity. So now the ETH whale is realizing that I've been sitting here patiently because I know how to delay gratification, waiting for people to dump. Not only they're not dumping, but worse, they're removing the liquidity. Basically saying, you ain't having it. We're gonna keep that. And we got to worry about our t-shirt preservation.
Let's do some supply math so people can try to like wrap their mind around why price is gonna move so fast. So if you have $1 million, you get 15.2 million hex. Okay.
Mhm.
But if you have $20 million and you did $20 million orders and the price stayed flat, assuming that it stayed flat,
Yeah.
you could get 300 million hex. But I just told you guys that there's only 60 million hex in the pools.
Exactly.
So like the question is like, oh, regular people are going to ask, oh, well, how can you turn 60? How can there only be 60 million for sale, but I can get 300 if the price stays flat? That's the point. The price isn't going to stay flat, right? Because you're just one guy putting $1 million orders in, and every time you push the price up a little bit, you get your 15 million. Well, then people are going to push it back down a little bit, and then you're going to come back in with another million, and then you're going to buy maybe 13 million this time instead of 15 million. And then you're going to push the price up a little bit, and then people are going to sell back, put hex back in the pools a little bit, and it's going to keep continuing to chew the price up the chain. But you're just one guy that needs to put in 20 million. What about the other 50 or 100 guys looking at the chart that want to put in their 20 million, right?
Exactly. What about if FOMO kicks in and then you take 15 million and then nobody else is selling and pushing the price down that you're expecting? Because they all know that, hey, snapshot is around the corner. Why would I give away something when I know that we're on an uptrend? Why would I give up something when I know that I need T-shares? Why would I give up something when I know that, again, it's what did you show earlier? 129% over the last couple weeks?
This right here.
Whatever
there's,
that, yeah.
There's 50% more ETH and USDC than hex, and if you figure limit orders, what's sitting behind price is support that you can't see here. There's got to be more even. ETH and USDC sitting in limit orders, just waiting to buy.
Exactly. And then if you can please show my favorite indicator, DMI, if you have it on the weekly. I mean, it clearly it sticked out perfectly. This is what I knew. This is real, and this is like it just worked out so well. But just talking about the liquidity, you're gonna love this. It's like the liquidity is so low that compared to the violence DMI used to do to get those prices, we're nowhere near. In other words, we're catching up those high prices faster, but with less money than the money that we used the last time around. That's what I really people need to clip this. I really need you guys to understand that. That's insane. We're going back to those levels faster and faster, and we're doing it with less money. Axis, can you do it on the weekly chart, please?
Let me get my color set up.
For those who are new, this is my favorite indicator, directional moving indicator, because it's literally how you get to track what the market makers are doing, like real money. You know what I mean? Because they're telling you if money is coming in or if money is coming out. So what you can see here is that compared to before, is this the weekly chart? Yeah.
This is the weekly, yeah.
And then the indicator for DMI, is it 1414? Because the indicator needs to be the settings.
Yep.
Okay, perfect. Thank you so much. So again, for people watching you, right, is that green is buy, red is sell. So as you can see, we just pop right back up green, and then the white is kind of like the
momentum, probably.
The momentum, right? The intensity. So not only it's perking up, which is really, really good, but on top of that, green just went above red again, which is very, very good. But again, green is nowhere near where it used to be back then when you have those violent green movements. Yeah. Like violent. So it's like we're catching up those 6-7 cents, but we're not even putting that much money yet. The volumes are still low. We haven't even cracked a $10 million day volume yet. So it's
let me reinforce that point once by showing people the TVL. So
thank you.
Back here, you can see this was in May of 2021 until August of 2021. Hex price went from 4 cents to 22 cents. While the amount of money coming in was relatively the same, and the liquidity pool only went from $3 million in the pool to $6 million, but you got that corresponded to a 5x in price. And so right now you're trending in a similar channel here. And I can pull that up now in this.
Yep.
You can see here how we're in these turquoise channels, and the thinking here is that price can go up 4x to maybe 30 cents, while this amount of TVL in the pools just stays the same as sellers put the hex back in the pools, whales accumulate the hex, market makers take the hex and remove it off market. Sellers put hex back into the pools on a new range up higher, market makers take the hex out, they pull it off the market. And this same pattern happens, and it can create a 5x price increase while the TVL doesn't really change that much. Maybe does a 2x in total value locked on in the pools, but it translates to a much bigger price move on the price chart.
Yeah, and it's a genius move because the idea is you want to create liquidity that's just enough to not hinder price appreciation, like which is all about, right? Too much liquidity, price can't go up as much or as fast, right? Again, Volatility, right, is literally the tool. It's an asset here, not a liability, right? It's the price you pay for the best performing asset. So having that kind of thing that I actually just explained is perfect, because you're moving up the price while creating liquidity that's just enough to create support and just enough to allow the price to go up violently and not have too much liquidity where it's like, okay, now we need, like Bitcoin, until you need like $100 million just to move like a couple percent.
We're basically at the same levels we were at in the beginning of Hex. Look at how there's 14 million in the pools. Well, right here there was 7 million. So we've only done a doubling, and price is roughly where here price was at 22 cents.
Yep.
Right now price is at 7 cents. So the price is higher, but the liquidity is not that much more either.
Exactly.
Right?
And
I'm sorry, price is lower. Price is at 7 cents. But it's basically like a reset, right? Because back here we were at the same levels in July.
And expect most likely that liquidity in Hex term probably going to get cut by half, or by being a fourth of that by the time we get to PulseChain, because again, more liquidity being removed to not get harvested, which then allows the price to go up
even higher, right?
Double, even higher, and while keeping that same $10 million or $12 million liquidity. So in other words, people are being tricked thinking that, oh, it's just going to stay there, when in reality, no, each Hex coin is now becoming more valuable. So now let's say if I had in one pool, I had 10 million Hex at 7 cents, when Hex is 14 cents, I just need 5 million Hex in the pool to get the same liquidity. So in other words, I get the same output, but I'm able to move up the price much faster. So again, this is where
let's talk about
buying
technically what's going on here. We got the bottom indicator here is called the sentiment oscillator. And the red line is bearishness and the blue line is bullishness. Well, on the weekly Hex chart, we actually just saw a cross here on bullish sentiment. So for the first time since, let's see, how far back does this go? First time in 455 days, we now are in bullish sentiment territory. And on this particular chart, we've broken the downtrend resistance. Okay. And so then when you go back to the DMI, I want to tell you guys what this is technically. This is a bullish cross on the DMI. And this is a bullish momentum cross. So not only are you getting bullish money in, but you're also getting an increase in momentum. And now the momentum of the bullishness has now eclipsed the sell pressure.
Yes, it's validated. And then the cool rule about DMI, for those who are new, is that as long as green is above momentum, it will continue to go. Right. The only time it starts to turn bad is if that green stop going up and then green goes below the white line.
A lot of times you'll see the green line come and touch the white line, and then it'll bounce off.
Exactly.
It'll come back to test it again, bounce it off, and then it'll come back to test it again.
That's the only thing for the many times. That's the only thing I've been looking at for. It literally calls stops. It's so funny. It's on the weekly chart. You can put it against Bitcoin anytime or anything. You will see it will be the top. Every time it just bounces off like that.
So we know the momentum is going to come up and increase as well, right? And the buy pressure is going to increase. I was just thinking a minute ago, I wonder what the price would be now if there was a lot more liquidity up until, say, about 12 cents, whether that new whale would have actually just blown through the whole lot. Instead of doing a 1,000 ETH buy, maybe they would have done a 3,000 ETH buy potentially. And because it wasn't there, they were restricted. They did not want to take that slippage aspect. So maybe that is one thing that is slightly hindering. But the other thing I was thinking about as well is these guys were around at the beginning of when ETH came out. They want to be around at the beginning of PulseChain coming out. Absolutely. Because it's a similar system, but potentially a lot more driving force behind it. It's like a second go at the game.
And they want to diversify.
And they have experience already. So those people, they're going to be very itchy sitting on the sides right now, knowing that there's not a lot to buy. So yeah, I'm really curious about actually having a lot of the smaller buyers, 1,000 to 20,000, actually marching the price up, which is why I'm keen to get it over that 7 and see it over that 7, because I want to see how the liquidity shifts, because that's going to entice people to add, especially because it's going to be quite a choppy, volatile range. There's going to be a lot of fees people can make, opportunity for those that are providing, and that might actually give the signal for larger people to then just take all of that chunk too, then adding as further support, holding the 7, holding the 8, holding the 9 cent areas. and then just leaving everyone else behind. All the other
It's
liquidity.
just so scary, man. Like if
Yeah,
you're a buyer right now, you're literally should be shitting your pants. Like
Yeah.
there's nothing left to buy, and it's not coming back.
it
Not
really
until
is.
we're up at to like 20 to 50 cents. Like you had 500 days to fucking buy the chart, and you didn't. And then some market makers came in and they took 250 million off the market like that because you guys
Easy.
freaking the dumpers fed it all into the market makers, and then those guys are diamond handed. They're not going to let you guys mess with the chart anymore. Period.
Yeah,
That's how it's going to be.
And that's the other one. You know, people that are waiting for certain price targets, again using TA. Say it again. Whales will shit all over the chart. They won't wait for certain points. They will look at that opportunity, how much they can grab, and they'll take it and just leave everybody behind. And that's basically exactly what's happened.
Me, it's that white line support that AXiS has, and you can see on the actual hex charts to USDC as well, which is about 10 cents. That line that shows the support where we were before we broke down that descending triangle. Like if you just look at the hex chart USD, yeah, that support line is right around 10 cents, I think 10 and a half cents. To me, this is where it's like, this is literally the final stop. You miss that, you're done. Because I see three powerful things. Number one, if you look at it, like again, just from the basic TA, right? That's a strong support line because that's when we start to puke from there. So when we regain that, that's already one that's very good. Number two, psychologically speaking, double-digit hex. Right. It's like, wait a minute, not too long ago, we were one day, nights two. It creates something psychologically, but like, whoa. And you see how the big candle that Godwell did when we were talking about PulseChain pre-launch, that's when he literally pushed it up so much. We were like 8.5, 9 cents, and then he sent it all the way to like 13 cents. So just that psychological play. And then what people don't realize is when we reach that double-digit plus, all the big wallet now, when they start looking at their yield, all of a sudden it looks really juicy. All of a sudden, 500,000 million rotation stake, you start getting 10K, 8K a month. All of a sudden, you'll be thinking twice about selling that hex because you really are using the system the way it's designed.
So this dip catcher algorithm is actually starting to shift up my targets. You can see here if I take it away. The other day, I think I did this like 5 days ago. I basically set that where the dip catcher algorithm had my targets. Well, now I just put it on again, and it's gone up. You know, so they're like even the algorithm is saying, okay, things are still moving higher, and you're in that like orange yellow bands have squeezed together. You can see here, and it's finding support on top of that. So if you look back in history here, anytime that we came out into a bull market cycle, we found orange and yellow squeezed bands of support all the way up until they widened. Okay. And then it's not until you came back down to test green, closed a candle below green before you started the bear market. So what we have here now is we've blown through green, and now we're finding that squeezed orange and yellow as support once again.
Yeah, the deep catcher reminds me the Kelton channel, which is the one I actually use. You know, he always in the bull market, he always rides the top of the channel. It might go like in the middle, but just always right. And then in the bear market, it touched that bottom channel, which is it looks similar to that, but it's only 3 bands, not 5. But yeah, similar indicator. Again, next up, I'm seeing it already. Next up is 8.5 cents, and I think that red dot is where it's at right now, right? AXiS, more or less.
So I'm sorry, I was reading the chat.
Yeah.
What'd you say?
Oh, I'm just saying, like the red line of the deep catcher, is it like pointing at 8.5 cents roughly?
Yeah, it's 8.34 cents.
Yeah, because I'm seeing that as the next stop, because again, it's mimicking last time we were running like this. You can see the next stop of the big green candle on the daily and the weekly. It points to around 8.5 cents. So I look at it like, oh, we're just regaining those same support zone that we had before. And on the Kelton channel, it's pointing towards there too.
So this fair value channel that I have here, basically, if you get above the median line, you can just shoot right up to the top of the channel, which is 200% to 20 cents. Like it's basically, we're just setting up for that move right now. And if no matter what pair you look at, the ETH pair, you're consolidating like, above the bull flag. This is a technical level where traders try to load up. The 618 is way up here at 60,000, 62,000 or 6,200. Let me see. Let's see, what does that equate to in dollar terms? Because as this is all occurring, you know, ETH and Bitcoin are going to do their own thing anyway. So we just kind of got to go by a relative zone. ETH. We got to know. We want to know what the dollar target is. Not that it matters, because it's all relative ratio trading in the world of crypto anyway, right?
Yes, sir.
1. 500. Let's see, switch this to USD. 10.6 cent. And
There
I
you
don't
go.
know if you guys agree with me, but this is basically what I've been saying for a while, is that we're basically setting up for a move like this.
Yeah,
And
10.6.
this is because of the low liquidity. And you know, the price is going to come up, and remember we were talking about a 78 80 cent target. Well, this is going to mean all the liquidity gets pulled off and everything just goes full on FOMO. Somebody comes in, makes a big order and pushes price into a new zone that nobody can stop from happening. And just because they're like, F it, and then they want to accumulate. Now the new range will be like the all-time high down to like the top of this band potentially.
Yeah.
And
You know what?
Hex does the impossible. Like we've all seen it before, so it's not out of the question.
And
Yeah,
what,
to me, it's almost expected at this point. Go ahead.
what we're seeing a lot as well is rotation out of other coins. The Down Forever coin, that particular one, I saw, I think it was about 800,000 hex was bought out of selling Down Forever coin. So lots of the other coins are being sold off. They're starting to move it into hex, and that's adding a lot more support. Momentarily bad for other coins, but adding more support, reinforcing what is going on inside of hex, in obviously the anticipation of what's coming.
Mm-hmm.
All right, guys. Well, probably this is a good time to close it down. We've given you guys a lot of good information this morning. I appreciate you guys for joining me. Anything else you guys want to closing statement?
Yeah, one last cool thing that I wanted to add for people is, I mean, two actually, is that number one, the reason why that 10.611 cents is also a very, very cool zone is that if you do the Fibonacci retracement from the top, you know, the 51 cents, it literally coincides basically where the 786 is. So it's like, because everybody knows below 786 is literally just like accumulation zone, like where you buy a lifetime opportunity, right? From the top, because you're almost 80% from the bottom. So it's like right around that 10.5, 11 cents is literally
the way I have it here. Let's just, and you tell me what you, if this is what you're saying, but like check this out. I took the top candle close here down to the base, and our 786 is actually here at about 23 cents.
Yeah, no, I just did a retracement from the top. You know, when you do this basic from the top to the bottom, I did it like on the weekly chart, and I did it for the entire like kind of like last run we did. I did from 51 cents and then down to almost like around almost like 002. So I literally did like just a retracement from the top.
Oh, from the previous.
Yeah, on the I use V2 because that's from the previous run up that we had. When you retrace that, it's so funny. You get to see. Yeah, exactly. So I did from the top all the way to like that little wick where you have it where the moving averages start. So I retraced from 51 cents to the wick of big payday. Gotcha. Yeah, look at that. And then you get to see how the confluence where it's about to go for the 786 exactly is right around that zone, which is literally where the long-term support was before we puke. So it's like another confluence how we literally are running. Because when I first learned about retracement, that's how the guy taught me. So it's like this is why that 10.6 to 11 cents, man, such a key zone. This is why I also said once he passed that, and if you didn't catch your stuff, oh, you're done. You're left behind. And then one more cool stat is to piggyback to that is inflation numbers are going to be good next month. Again, people are thinking, oh, we did a little bit bad, but actually after the 5 months in a row, we did really good. The bad that we did was just by a tiny bit. It's going to rectify itself next month. And we have another reading before the Fed meeting. The Fed meeting is on the 21st, I think, of March, and the reading is on the 14th. That's more than a week to correct that. DXY is doing a little dead cat bounce right now, but I've anticipated to continue to go down. So that's going to catch a breather for Bitcoin. And then for Ethereum, we also got the merge coming. If you look at the Ethereum to BTC pair, you get to see how like the bull flag looks to be breaking out as well. So all that to say, I predict DXY is going to catch a break. Bitcoin is going to catch a break. Ethereum is going to run against Bitcoin. And of course, Hex is just going to enjoy all of that. Plus some cool announcements, PulseChain V3. So I'm just literally the next 2 weeks, don't be surprised if we catch that 8.5 cents on the way to that Fibonacci 786.
All right, guys. Last thing before we go, I got some streams coming up in the next couple of weeks. I got one today with Crypto 7. I think that's at 1 p.m. Eastern. That's at 6 p.m. his time. So if you go to axisalive.com/events, this is where I post all my upcoming streams.
What's that Singapore time? What time is it? Your time, you said?
1 p.m. Eastern. So it'll
1
be
p.m.
5 hours.
like 5 hours.
Okay.
And then later on in the week on Thursday, I got one with this is someone that Funding Jim recommended I go and stream with, is Crypto Weekly Review. He seems pretty edgy. He's pretty on top of the markets right now. His general thesis is that you're going to see a final flush down before we go higher. But we're going to get to chat and hash out our opinions on the markets. And then Sunday, I got Pure Alpha with Crypto Sloth. We've been going deep into the mechanics of different blockchain tokenomics and stuff like that. And but we specifically went into a lot of Icosahedron data and into his website where you can calculate different variables for that system. And then next week, I got Black Hexakin for charting, like a charting 101 session for anybody that just wants to come in and ask questions about how to use TradingView. And then on Wednesday, I'll have the Beard on for like more of a philosophical discussion. So if you guys are interested in any of that, make sure you keep up with the events page. Appreciate you guys, and you know,
Catch you later.
Sounds Gucci. You steak, you date, and you chill.
Nice one. Catch you guys later. Thanks a lot.